Breaking news in the last hour brought to us by Andrew Ross Sorkin. Activist ValueAct Capital has agreed to support Disney's slate of board nominees at this year's annual meeting, siding with Disney in its battle with activist Nelson Peltz. The entertainment giant and ValueAct have entered into a confidentiality agreement that enables the company to provide information to the investment firm and consult with ValueAct on strategic matters. This is a win for Disney after Peltz launched a new proxy fight against the media company just a little more than a month ago. ValueAct has been building a position in the stock since the Screenwriters and Actors Guild strikes. And in the press release, ValueAct's co-CEO and CIO Mason Morfitt says, "We could not be more excited to partner with Bob and the board to help create long-term sustainable shareholder value." Mike, as you pointed out, they go on to talk about ValueAct's experience with a lot of investments they've had in media and technology. And I think you were right to say that this is kind of setting it up against Nelson Peltz, who has much more experience when it comes to consumer products.
And Disney's actually been clear about that in the past in sort of opposing Peltz's slate or candidacy for the board, essentially saying, you know, we don't really hear anything specific to our business that we feel as if we should necessarily be listening to in an official way.
It'll also be interesting. James Gorman starts on the board, right? And so all that Morgan Stanley experience, the experience of sort of how the street is thinking, how to communicate to the street, I'm sure, you know, that's going to be an important part of his campaign against Peltz, is to really understand and relate to. Bob's been very good at that over his career, but having Gorman on board will really help that as well.
And we pointed out before, this is Peltz's second run at Disney. The first time, he called it off and said, "Never mind, I'm happy."
On
CNBC. He announced that on CNBC.
To Jim Cramer,
on the street with Cramer. Yeah. He said, "I'm calling it off right now," because he was happy about Bob Iger's return.
That's right.
Since then, the stock's down $70 billion, seen a big tumble, but so have so many of the traditional media companies.
That's right. It's more of a read on, you know, exactly what cards do you have to play. And arguably, and UBS is actually out today with a note saying, "We love Netflix, but among the rest, Disney actually has really the best opportunity in terms of, you know, the multiple streaming platforms, obviously the theme parks, the franchises, things that, you know, the exposure to linear is not great, but it's less than some of the companies like Warner Brothers.
And when they have Hulu, they can really start this mega bundle.
Yeah, exactly.